iFabric is a developer and marketer of apparel, high-performance apparel, and advanced fabric treatments for improved fabric performance. We've got CEO Hylton Karon joining us and giving us an overview on the company, as well as reviewing the recent 2024 financial results, which saw revenues grow by 55% and earnings swing to 3.7 cents per share from last year's loss in the fourth quarter. It's April the 3rd, 2025. I'm Martin Gagel with Market Radius Research. Please remember this is neither recommendation nor investment advice. We're here to learn about the company. Hylton, thank you very much for joining us.
Thank you for having me.
This is your first time here. Thank you very much. I've wanted to hear for quite a while, so this is appreciated.
Well, firstly, thank you everyone for taking the time to hear our story. And with that, I'm going to do a quick run through of our investor deck. iFabric Corp is headquartered in Toronto, Ontario, Canada. We have a distribution center in Houston, Texas. We have a solely owned subsidiary in Taiwan. We have a development team in Kobe, Japan, as well as in China. What that does is it allows us, with our unique and proprietary technologies, to have staff in the Americas and throughout the Asian arena for manufacturing to onboard our customers and assist them in incorporating our unique technologies into their offerings as they go through their production process. The six real cornerstones of what we are as a company. Everything that we do, and I think the cornerstone before I get into this is we have developed or sourced unique technologies for both the medical and the athleisure market space. And it is those technologies that have allowed our company to enjoy the kind of growth that we have over the last 5 years. I think if one took even a shorter picture and viewed the fact that the pandemic probably took 18 months out of that cycle, I would dare say that it was more like 3.5 years that we went from 10 to 30 million. And I would say that, you know, my outlook and the outlook of management in the next 3 years, there's no reason why we shouldn't double from 30 to the 60 range on our way to 100, and who knows what the future holds for us. But we are really in a high growth business with wonderful opportunities in multiple markets. So what we do, and really the cornerstone of our success, is that we design and manufacture 95% of what we sell. So a small portion of our revenue is where we sell the technologies, and it's a chemical sale to the likes, and I'll show you on the next page who are some of our commercial partners, major brands, global brands. But for the most part, and the reason why we got into these technologies is to add them to our offerings, so that it really separates us from the crowd of private label, what people call white label manufacturers. There's enough of those in the world. They really didn't need another one. But it is our uniqueness of being able to really offer something unique and different to the marketplace that has really resonated. It's been successful for them at retail, and the kind of growth and opportunities they're giving us going forward is what gives us the kind of enthusiasm and giving the kind of numbers that I've just illustrated. So we design and manufacture. So in Ontario, in Markham, we have a full staff that literally go from the beginning, where we design the product, and we do all the technical aspects of what are required for manufacturing. We give that to the manufacturer. We then put prototypes through full onboarding and testing to ensure we're getting the correct quality and the correct specifications of what we're buying. And then everything is authorized for manufacturing. We import everything, as I say, either to our solely owned building in Markham, Ontario, or to our third-party warehouse in Houston, Texas, for distribution in the United States. As I say, in Taiwan, we do warehouse and inventory chemicals. That is purely a chemical sale that we sell into the Asian marketplace from there. So from designing and manufacturing, we get into license opportunities, and I've got a further slide on talking about licensing, but it's been a very important strategy for us. Retailers are still very brand sensitive, and so what we've done is we've licensed brands that are relevant to their customer base, and it's been a great opportunity for us with our unique technologies and licensing that we've really enjoyed the kind of success that we've had. The next 4 slides kind of interrelate, but product research and development, whether it's design, whether it's something aesthetically interesting in a fabric or a technology, we continually, searching the market and with our team developing next generation products. So this is an ongoing process, but it is really what keeps us alive and what keeps us current for our customers. And then part of that is functional textile technologies. And I've got a deck that will illustrate probably more than a dozen different technologies that we offer the marketplace. And in some cases, we can actually do a hybrid where there's more than one performance characteristic that we can include into a garment. It should be noted that all our competitors pretty much focus on one technology as their business, and that just speaks to the diversity of what we've developed and how unique we are as a company. We're not a one-trick pony, and we do product development with future generations. So technology, as I say, and I'll continue throughout this presentation, is really the cornerstone of our success. Testing and lab services is part of the technology. Every batch, whether the customer manufactures it or we do manufacturing, goes to a third-party laboratory for a certificate. It is critical that we continually show our customer, we're protecting them, and secondly, we're protecting ourselves, that what they're paying for, they're actually getting. A lot of technologies can talk the talk, but when it comes to the actual science, fall short. And we've built the kind of following and the kind of comfort with our customer base, because what they pay for, we ensure that they get, and we're protecting our business at the same time. And as I said, technical support, we've got staff in the Americas and in Asia, so we pretty much can cover the globe by putting staff out in the field to onboard customers. This slide talks to the major retailers and brands that we work with and that we've got future product development with. The success of the company has been in the past primarily focused on the Canadian marketplace. 2024 saw our first major foray into the United States. So where we were dealing with Walmart in Canada and Costco in Canada, we've now onboarded Walmart in the United States. We've got Target, we've got Kohl's, and we've really broadened our reach and our customer base quite significantly in the United States, and we really look forward to that. I know that we will get onto the tariff conversation at some point in this presentation, but we'll deal with that separately. It's not going away. These markets are too big and too significant for us, and we see significant growth in the future in North America as well as in Europe and in Asia in years to come. But North America has, for the most part, been our initial focus. I spoke earlier about licensing. We do a phenomenal license program with Roots, and pretty much that works with our offerings at Costco in Canada. It's not a brand that has any relevance in the United States. So a lot of what we're doing in that category, we will probably offer to the retailer in their US stores under a different license. We just talking to a licensed company right now to work and see what more relevant brands there are in the United States that would resonate better with that consumer. Maidenform, part of the Hanes Corporation, has been a long-standing brand that we've run our ladies' lingerie department through. Athletic Works and George are part of the Walmart private label that they own. Simon Chang, Sun Ice, and Under Summer are just some other brands that we have successfully used their branding to enjoy corporate growth with them. And then
Hylton,
yes.
sorry, I want to just make sure I properly understand. If you can go back to this. So
Yes.
you license, let's say, as an example, the Roots brand. How
Yes.
does, like, Roots is well known in Canada. They've got stores everywhere, but not, as you said, not so much in the US. So do you license the Roots brands and then find distribution in the US, or just explain how does that licensing work?
No. Roots are pretty disciplined with what products they manufacture and sell in their retail stores.
Okay.
So there's a segment of product. For example, we've done swimwear.
Okay.
At Costco in Canada.
With the Roots brand
with
on
the
it.
Roots brand and with the Roots little logo.
Okay.
And we've done it for ladies, and now we're doing it for men's and boys and girls. And so that brand has really resonated very well with their customer for many, many years. So these are products outside of what you would find in a Roots store.
Okay, so you know the buyers at Costco, so you go to them and present, say, hey, we've got the Roots brand. Here are some ideas for products. You manage the whole supply chain and sell it to them, and then Roots clips a royalty or something like that.
That's all their involvement is. It's purely their brand on our product that we design, we manufacture, we bring in, we distribute, and they get a royalty for the use.
And then they obviously oversight it, make sure everything you're doing is consistent with brand.
Before anything is manufactured, we do a pre-run through their design team to ensure that it meets within their corporate philosophy.
Okay, and that's essentially what you're doing with all these other brands on this page. Exactly. Is find different channels they don't normally go through, and you manage it through there.
It's the perceived value that the consumer believes they're buying Roots from Roots and Maidenform from Maidenform, or whoever it is. And we are actually the manufacturer. They've just licensed their name to us.
Gotcha. And you manage all the headaches. So for them, it's they get a check every month, and
anything other than revenue for a royalty for the use of the brand name.
Excellent. Thank you very much.
Very successful for us. Now, in addition to that, we've developed our own brands. So once again, you're not paying a royalty, and it can be significant. So this is where one has to be a little sharper from a price perspective, while still giving that level of exclusivity to a particular retailer. So they've got their own brand, not available at their competitor, but it is not a global brand. However, in a lot of cases, these brands are, because of the size of their distribution, are becoming more and more well-known. So working closely with these retailers, they have enhanced our IP because they have really promoted our brands, and our brands have been very successful for them. So in a lot of cases, these brands are really getting North America-wide optics and have been successful at retail. So clearly, it's resonating well with their consumer. And so this is a strategy we will continue to use. This deck really speaks to the technologies, and there's a wide variety of technologies, and I couldn't do justice to all of them in 15 hours, never mind this 15 minutes. So what I'm going to do is I just quickly want to draw everyone's attention to the top left. Protex 2 is our medical grade antimicrobial and antibacterial formulation. And this is a variety of, it's really a recipe. And if anybody knows the textile industry, you've got man-made and you've got natural fibers. So needless to say, this is not a one-trick pony. And why the success of our company is we know how to make recipes, whether it's cotton, rayon, nylon, polyester. And so this is not a quick and easy business. and that is our specialty, is how do we find technologies that are relevant for the consumer and for their retail outlet, and how do we add these attributes to a garment. So our Protex 2, while primarily going to be focused on the medical industry, is really being very well received in the athletic departments as well. People that go to gymnasiums, that work out, if they put their after workout apparel in a closed gym bag, and the odors that come from these sweaty products, we really have really quite a wide smorgasbord of applications of why our chemicals are pertinent to their apparel. We've got EcoPel, which is part of a durable water repellent. So if you saw on our page, we deal with the North Face, which is part of the VF Corp, and they sell these ski jackets. Well, what they want is they want water repellency. So it's very interesting. We've got a number of these technologies, and in some cases, then one talks about a medical scrub. Well, you might want an antimicrobial, but also have a water repellent aspect to it. So when the nurse is working with the patient and there's fluids, that these fluids are not going to dam up or get absorbed by the textile, and basically you're spreading infection, and you're actually protecting not only the patients, but you're protecting the workers in the medical industry. So it's quite a broad spectrum of opportunity, and rather unique of us in the way we can actually build these hybrid products for our customers. And I just want to actually point out Protex 2 again and jump to the next slide. And here you see Protex 2 front and center. These are scrubs in Walmart stores in the United States. And our customer who features our technology in their scrubs, really, it's our technology that they're promoting as to why their scrubs are a differentiator and are a premium product for people in the medical industry. So really, it's quite telling of how our technologies are out there in the marketplace already, and how our customers are promoting our brands that we own ourselves in terms of what added value it brings to their sale. A little bit about us as a company. Our corporate structure, around 30 million shares outstanding. We've got options of 1.9 million. There's no warrants as we speak. So if you take the options and the shares, you've got a fully diluted share standing of around 32 million. Working capital of around 20 million. And our long-term debt is 8 million. So if you take the balance sheet of this company, you've got a 20-to-1 asset to debt ratio. We're a really strong company. We're well financed, cash in the bank. We're just about to release a press release with a revised round of financing that the bank has given us, which is a substantial increase. However, we're not into the bank for 1 cent. So these are lines of credit that we're growing as the company grows, because sooner or later we are going to need these facilities, because the company is growing at quite an impressive pace. Management ownership. You want a company whose management have got skin in the game? We're the company. We really eat, breathe, and sleep it, and we own a good share of it. And as opposed to companies that do raises every year, and management enjoy the benefit of really comfortable salaries for 2 years, and management changes every 2 years. We've been around 20-25 years, have been committed to this business from day one, and it shows. Besides the management ownership, there's primarily retail, very small amount of institutional ownership as the business continues to evolve. This slide really speaks to the growth of the company. I would like to highlight just 2 things. 2021 was an anomaly year, because when one was in the height of COVID, a lot of companies asked us for scrubs and masks and things that are really not that widely used post-pandemic. So it was an artificial lift. I think that number in terms of core business was probably closer to 15 million. And the reason I'm bringing that out is that and of course, 2021 took a lot of growth away. We could clearly have been there in 21. As you see, we were able to achieve, even with the anomalies in our core business in 22, the jump from 15 to 20 to 20, almost 24. We just came off a year of 27. And I think that it is important for me to highlight that the 27, while 12 months of turnover, those Canadian investors on this call will remember that there was a strike in the port of Vancouver halfway through November into December, which really saw us only shipping for half of our Q4, which really would have taken that number into the low 30s. The good news is none of the products that we had in the strike that we now have received, everything has been shipped. We thank goodness we're faced with no cancellations. So while it was unfortunate from a timing aspect in terms of showing growth, all of those numbers will go into Q1 of 25. But I really think if one really understands that COVID took probably more than a year out of this graph, and I would like to say in 4.5 years, we grew from 10 to 30. It's not going to take us another 4 years to go from 30 to 60 with the kind of roadmap that the company is on going forward. We're really enjoying a lot of growth and in new product segments. So I think in 25 and into 26, we will be releasing announcements once the product hits the stores. Our customers really don't take kindly to us making announcements of what they've got in production that hasn't hit the store. So I think once it becomes public, we will add more color to that statement. But suffice to say, where we've put out a release earlier this week talking about double-digit growth on top of double-digit growth speaks to the products that we've developed in 24 that have been ordered early in 25 for shipment late 25 into 26 that will give the company another significant revenue growth and profitability growth as our revenue grows very disproportionate to overhead. We're cash positive now. If one goes spend some time on our financials and the press release of this Monday, I'm pretty proud of our last 12 months, and it gives a great indication of what we were able to achieve and what the future holds for us. And with that, Martin, I'm going to hand it over to you.
All right. Since we're on this page, ask a couple questions. So there was the strike, revenues got deferred and pushed into Q1. Firstly, do you think that because it got deferred, then maybe subsequent orders are going to get deferred or not placed in that, or is it
No,
is it strictly just a bit of a deferral and
no,
everything else it'll smooth out?
It unfortunately, what happened was those were goods that were needed. A lot of it was swimwear, which you really need. So the retailers really had a hole in their shelving until those goods arrived. And so they just took bigger quantities and they moved through it at a quicker pace. The retailers, and I'm sure you know it, if you go in December or January to a retailer, they've already got summer goods on the shelf and it's snowing outside. So no, the retailers are out of phase with what's going on in terms of the seasonality. So no, there was no. There was no cancellation. There was not even a delay in the draw. So they were just happy to have inventory and to be able to move through it. It really was probably for them a 4-week delay. So it was a delay, no question, but nothing that they weren't able to work through.
So I'm thinking Q1 of 2025 is going to be a very strong quarter for you. Would that be a bad?
Q1 is
assumption,
always
or am I on the right path there?
Q1 is always, has transitioned now that we've brought goods from the summer season, because traditionally the third and fourth quarter of the year, especially Q4, was traditionally our biggest and will continue to be where products get launched. So Q1 used to be big because a lot of things weren't actually launched in December. And now that a lot of these launches are now actually starting in December for the spring season, instead of late January, they're really bringing them in earlier and earlier. So Q1 will be a strong quarter, and Q2 are, Q1 and Q2 are really good indicators of our business. But really Q4 is by far the biggest quarter. If you saw, we did over 10 million. So
Yeah.
it really is the quarter that makes the year, and really shows the growth of what this company is capable of doing.
All right. So Q4 was strong, despite a bunch of product being pushed out. Okay.
Yes.
So you should be really comparing there's seasonality, so you don't compare Q1 to Q4. You compare Q1 this year to Q1 last year, and look at
Absolutely.
on it a year-over-year
You
basis.
have to look at it that way. Correct.
All right.
Yeah.
Okay. And where to on your products, on your fabric treatment side of your business, is that, like you're talking about North Face, how does that business work? Do you sell them barrels of your treatment and then they apply it themselves? Or are
Exactly.
you somehow
No,
take it into your supply chain?
no, that's it. We
Okay.
supply them chemical.
Gotcha. Okay. And
Yeah.
from your map, you've got offices in Kobe, Japan, and Taiwan. Do you formulate them yourselves, or do you get chemical
So
companies to produce them
no,
on your
no.
specifications, or how does it work?
We've got staff in Asia,
Yeah.
and every fabric, every base fabric, we have to know what the various fibers that are in that particular fabric. And so
Okay.
what we do is we establish what's called a recipe.
Yeah.
So there's a lot that goes into it, and I don't want to get into a textile dissertation, but
Yeah.
basically we formulate a recipe and we supply the recipe already blended for that fabric. So we don't want to give away the IP of all our various components as to how they can, because basically that will let the cat out of the bag. So we just give finished recipe barrels for a particular production run, and it is on that basis that they use the chemicals.
Okay. So I believe one of the antibacterial one is the Protox.
Protex 2.
Protex 2. So there's no one Protex 2. If it's going on a cotton thing, it'll be formulated differently. If it's on a hybrid, it'll be formulated
There are some similarities in terms
Yes.
of the active, but in some cases you might need a binder, and everything has its own unique
Okay. So you need to really
properties.
work. They don't just phone up out of the catalog and say, we'll take some Protex 2. They phone up, this is what we're doing, work, and you got to work together.
And keeping in mind, because the dyeing and these chemicals are supplied and infused at the dye process, which is the first manufacturing process for a textile, we really are in the beginning phase of their manufacturing. So we're really getting orders, and they have to give us ahead of time a heads up as to what the volumes are. So we really have really nice optics in terms of what revenue we're going to be doing many months out. And we do, because that's why we've got offices and why we keep inventory in China, in Japan, and in Taiwan, is because in a lot of cases, they don't think about it as much as they should, and then they call and they need goods the next day. So we do keep a certain amount of what the more relevant formulations are. We do keep a bigger inventory, and if it's something special, then obviously we'll make it on an as-needed basis.
All right. And you going back to that one slide, you had whatever 2 columns of, I don't know, 20 or 30 different products. coatings there.
Yeah.
Is that all based off of, let's say, a platform technology, or is it more of a platform know-how? You've got a team that says, okay, we want to do this and that, or is there a real, like a certain molecule you're using or
They are
process that everything is kind of all based on?
nothing here. Each one of these is actually a business unto itself.
Okay.
So there's no common thread in anything on these lines.
All right.
Now, one thing I just want to, I know that, just to let the audience know, we have to be obviously effective. We have to be commercially, acceptable, but we also have to be environmentally responsible. So a lot goes into what we do in the behind the scenes to ensure that what we're making and what our customer and what the consumer is getting is within the regulations in the country that it's been bought in. So a lot goes into developing these products and ensuring that they are acceptable on a regulatory basis as well, and that they've got a good environmental story.
Is this a competitive business? Are there like I guess then I don't think they're that much of a coating company, but Gore-Tex is obviously the one that kind of everyone comes to name. Are there a lot of companies like you doing these fabric things, or how? What are the dynamics of that market like?
It's big, and there are a lot of companies. I mean, Dow Corning, they're in this business, um, and we've gone up against companies of that size. And you say, well, how can a small Canadian company go up against a Dow or a Monsanto and all these big companies? And in a lot of cases, they are nothing but chemical companies, and all they want to sell is chemical. And that's our uniqueness, and our, I dare I say, what really separates us from the crowd is we're an apparel company developing technologies. So without these technologies, our apparel wouldn't really be, wouldn't have that extra level of property and relevance at retail. And it's our really forward-looking designs and using the right fabrics and really knowing how to make a garment correctly, and then adding the technology so that technology pulls the apparel sale and the apparel pulls the technology. That it's a great synergy. And a lot of people say, well, who's your competition? And I don't want to sound flippant, but I don't know of other apparel companies that are developing technologies. I know a lot of, as I say, chemical companies that would gladly sell you chemical. So our real hook is that we really don't want to sell you a barrel of chemical. But when you're dealing with the Under Armours of the world and the North Face, they're just too big. So it makes perfect sense for them to use our proprietary formulations. But it isn't really the lion's share. And if one looks at the revenue of chemical to apparel, it might be 10% of our business. So we would have a smart, people say, well, why don't you just become a chemical company? Well, we'd be a $10 million business. We wouldn't be on our way to 50 and 100 million just selling chemicals. So
is there a lot of synergy between those, your apparel businesses and the chemical treatment business? Like where you know the buyers or the supply chain on one, so you know how to work it with the other one? Does each business help each other one out?
Well, I'll give you an example. Durable water repellent, this EcoPel. We were approached by the North Face. They have these beautiful ski jackets and they want the repellency on the outside. The problem with water repellents is their fluorocarbons, which is also the story of Teflon, is very carcinogenic for the people working in the manufacturing dye houses. So they came to us and said, how can you develop a C0, a fluorocarbon-free water repellent? So once again, it talks to that social responsibility of our customer and how they want to put out a product that is socially responsible. And we worked with them and we developed a C0 water repellent. Now, the question is, well, how durable is it to washing? And the question is, well, how many times do you wash that ski jacket? So you might get 15 washings, which is still 5 years use out of that jacket. It's not where it's a medical scrub that needs to be washed every week. So we really have to be very honest with our customer and explain to them what the properties we bring to them, what are the attributes and the successes, and how it can be applied for their offers. So they're more in the public eye and they are more socially exposed. And so we've got to ensure that what we're working with them very closely is to develop products that help them go forward with their consumer.
Sure, and it's always about trade-offs. Well, you get more of this, but you have to give up that, or at a higher price, or
in most cases we've done amazingly, but that is that particular technology in order to get durability, but the solvent is really what allowed it to stick to the surface of the fabric. And by taking that fluorocarbon solvent away, one has to work with other chemicals in order to use it as an adhesive to hold the barrier chemical to the fiber. And so it's not as durable. But thank goodness you're not laundering your ski jacket once a week, and you should have many years of pretty decent performance characteristics out of it.
What is the margin profile of this business versus, let's say, the licensing business versus your own branded product?
We really don't differentiate. We've got a pretty disciplined approach to margin. And even with, you have to put a premium on something that's licensed. So if you want something that's licensed, you've got to know that you are going to be paying the premium. So that's what covers the license fee, but certainly it helps it sell at retail. So it really doesn't have a major, it's minor at best, and it's almost not worth discussing in terms of our margin. We've done pretty well of bringing most of our corporation into the low 40 range as opposed to the high 30s. And I think with volumes and times to come, we'll enjoy the purchasing power of increased volume, which should give us even higher margins as we go forward.
So all your product lines are roughly in the low 40s, from the chemical, the fabric treatments to the other side.
We do have a slightly higher margin with chemical only, but it's a small part of the business. So it's not going to have a major impact on moving the needle.
And with your growth for the coming years, how much why do you think you are going to keep growing? As you build a relationship with your clients, they feel more comfortable with you and they'd rather send it through a trusted supply chain partner, or why will there be growth?
Well, the growth, a lot of core generic growth comes from the fact that when you're dealing with a retailer that's got 4,500 stores and they're testing a program in 500 stores, then the next year they give you 1,800 or 1,700 stores. Then you're successful with your phase 2, your second year. Then they'll take you to 3,000 stores. Then you're going to go to 4 or 4,500. So you've got a lot of, so where we've only, and I said 2024 was the first year of really selling into the US, where they were test marketing at 500 doors. We already know what they've ordered for 25. And it's more than double what 24 was. So, and because they've been so successful, we've delivered on time, we've delivered the right quality, and we've super competitive with our pricing. So when you've got the right formula, and clearly it sells well for them at retail. So why not keep working with this company? And of course, our uniqueness with technology. So that is really what has brought us the kind of visibility and growth and enthusiasm from our customer base of what, well, you make this and this for us. Well, can you make that garment for us? So in a lot of cases, 2025 and towards the end of the year, once it's on the shelf, we will make statements of what these products actually are, but they're products we've never actually made before. So as well as enjoying generic growth, they are forcing us to make new category products for them, which is really exciting. We've seen the kind of order book that we have, and probably enjoying the biggest order book in the history of the company. So we really are, we've got good optics, keeping in mind that any product that we sell, you have to make the yarn, you have to make the fabric, you have to dye it, you have to do the cut and sew package. Then you've got to import to these shores and then do distribution. So you've got to get an order 4 to 6 months out. So sitting in April, where I'm giving some kind of guidance as to what kind of turnover we're going to do for 25, it's not based on a thumb suck, it's based on an order book.
Okay.
Now, it could be some seasonality inferences that come in, but that can be a 3-5%, draw a little quicker, draw a little slower, but it's going to sell and it will be taken at the end of the day.
All right. So you've just started selling into the United States. Where is the geographic breakup, let's say, of last year? Do you sell finished product just into Canada, or what countries do you sell finished product on the apparel side to?
So the apparel has been primarily to Canada.
Okay.
We've had a long-standing relationship with Kohl's, which is 1,200 stores in the US.
Okay.
So that was an account that we've continued to work with, and we've enjoyed an over 10-year relationship with them.
Okay.
But opening up Walmart, I mean, it was the Walmart Canada people that really told the US, why aren't you dealing with this company? And we've grown big enough that they feel that they're comfortable because the volumes are so much higher in the US. So we've really been promoted by their sister companies. Target came on board, and we really have enjoyed Costco. We've done phenomenal business in Canada. It really has been a wonderful growth area for us. And we look forward to seeing what we can do in the US.
All right. Okay, so you've achieved most of your, or much of your growth until recently from just almost exclusively from Canada, and now you're really expanding your footprint. And just to be clear, I'm sure everyone doesn't think otherwise, but you don't run threads, and like you outsource all the manufacturing to third parties in Asia, and you to give them the specifications and so forth, and they do the work and ship it, correct?
The only thing that we supply them is the technologies.
Yeah.
All right. Of course, they're going to give us samples of what different fabrics, and then we select the fabric. But everything, we give them the design and we give them the chemical, and they do all the cut, the manufacturing for us, package. We get a completed product to our warehouse.
Well, obviously, given where we are in the conversation, and we're one day past Liberation Day, we cannot let the not discuss tariffs. That's on everyone's mind. And given your production is a lot done in Asia, Vietnam, et cetera, where those now infamous tariffs are on, what can you comment on that? They're obviously going to change as the start of a negotiation. So tomorrow or next week or next month could be very different. But first thoughts, hot take.
The fact of the matter is that this has been a long-term time coming. So it's not something that just hit us yesterday as a surprise. So we have had multiple conversations with the buyers. And so they know full well that at the end of the day, unfortunately, it's the consumer that pays. So nobody, we don't work on, our margins are certainly healthy, and we're not going to give that up. We're in business to survive and to grow. So at the end of the day, unfortunately, these tariffs get passed on to the consumer. And so if one believes that one can add tariffs and lower prices, I'm certainly not smart enough to understand how that works. I can only see consumer prices going up. And I think that that's really the sad reality of what's going to happen. I think our industry will never come back to North America. The labor rates in the United States and Canada will never compete. I don't care if they put 100% tariff on labor, it's still cheaper manufacturing in Asia as opposed to manufacturing in North America. So those industries are not coming back anytime. And I just think that this is very early days. I think that there's a lot of posturing and negotiation that's going to come out in the wash. And I think that we shouldn't overreact. I think that a month from now, dare I say, I think a lot of numbers are going to change. And 3 months from now, we're certainly not going to be talking about tariffs. We're all in the same industry. Our competitors are all in the same industry. Moving cut and sew is not that easy. It's a manual skill that you have to teach somebody. So if you think that you can just buy the machinery, plug them in the wall, and people can walk the next day and learn how to cut and sew a garment, it's not possible. So really, there is it's foolish to think that the kind of I think there is something like 180 million garments made a year, or it's a preposterous number of garments that are made. That kind of production cannot see moving. If you took 10 years, you couldn't move it. So it really is, it's a fool's fallacy. I just think that it's a negotiation thing. And I think that, as I say, 2-3 months from now, we won't be talking about tariffs. And we're all in the same boat. So the industry is going to have to just deal with it accordingly.
So, but your relationship with your retailers, they've placed their orders for the fall season with you.
Yeah.
They know that tariffs could, whatever they'll be, but that's essentially their problem. They're the importers of it. They've got to pay that tariff. How they put it on.
No, they are not the importers. We are the importers.
Okay, but you then add that to your, they accept the fact that
we have to. I mean, there might be a gap of a week or two or a month where we're going to get hit with some tariffs where the buyer says, I give you X amount of business. Can you do us a favor, because we don't know how. So is there going to be a hit? I'm expecting something. I just don't think that the reality is that we're going to get out of this completely unscathed. The beauty in our particular business is more of our revenue right now is predominantly Canadian based, is not US based. So a lot of our growth in 26, well, even end of 25 into 26 will be USA, but we've got plenty of time to let the situation settle down and really figure out how to address the retail.
For 2024, what was the rough breakout of revenue between Canada and US? Do you have that?
I think the US was probably 25-30% of our revenue.
Gotcha. Okay. All right. Excellent. There is a question here from the audience. Can we envision EBITDA margin going over 10% in 2025?
Yes. I think that we're getting much closer. So I think that 2025 could very well be our first year where EBITDA goes north, gets into the double digits.
All right. You also announced, or we discussed your line of credit, that you've got a healthy balance sheet, but a line of credit. Is that, do you think, strictly for working capital? You seem to manage your working capital well. Only that. Would there be any opportunities for M&A in where you are?
We look and we continue to look. We've got a unique situation, so it's not something that I can talk to right now. There's nothing that we've really got on the board right now as we sit today. So it's something that I would say in the future we will continue to find things that are relevant to our industry. But today, no, there's nothing on the table as we speak. It's something that we've looked at in the past. It hasn't panned out. We will continue. We've got such strong growth potential, as I say, within our industries, that we really don't have to buy that additional company or that additional technology. But if we can find something that is really unique and we can own it ourselves and have exclusivity, it's something that's never off the table.
So it's more on an opportunistic basis. If something makes sense that appears.
Got to be relevant to who we are as a company.
Okay.
Yep.
All right.
Yeah.
Okay. Just looking through my notes and questions here, and I think we've covered a lot here. I can't really think of anything we've missed. Anything that you would like to highlight before we wrap it up?
I think from an investment point of view, if you take 30 million shares and if you took our we own our building, which has got a very small mortgage of probably 2.5 million. It was just valued at 12 million. It's an off-balance sheet item. And you take an additional 20 million of working capital. I think that our share is such an attractive buy, and I truly want people to understand that it's basically trading at book value. So we've built a phenomenal company with phenomenal growth, with great future upside to profitability. It really is something that people should look at, and I think that 2-3 years from now, it's a company that I'm very proud of, and I really think that we've built something that is going to deliver phenomenal results into the future with pretty impressive growth.
All right. Hylton, thank you. That was really good. I get a good sense of what you're all about, and yeah, huge growth opportunities with you. You've only got your toe dipped into the US market. So fascinating. Thank you very much.
My pleasure.
All right. Have a great day. And hopefully we'll get you back here not too long and get an update on how your growth continues. Cheers.
With pleasure. Thanks for having me.